Red dildo party, red girthy dildos up your bunghole. Tether holders like them. They say, oof. And those with no tether said, oh, the red dildos up there too girthy. I need the green dildos. They're thinner. They feel better. They feel so much better. So just realize that you're looking at the only crypto YouTuber who let you know holding tether was of prime importance within 7 days of this happening. And it might have been like 5 days, but made 2 videos within 7 days of this stressing the importance of tether, and one of the thumbnails literally says holding tether for dips. So new viewers, hopefully, you know, on this channel, you know, viewing my channel, don't think I have a crystal ball. You won't find a crypto YouTuber who makes every call perfectly. That's not what you're here for. However, I am here to guide new crypto investors to be profitable over time, not swinging for the fences every time, because you're going to get screwed. And you won't be holding tether if you're swinging for the fences every time, because you'll always have all your capital deployed. So this channel shows you how to enter trades safely, very safely, as opposed to listening to a YouTuber talk about something just hidden by. And also I teach you how to sell, take profits like a boss, so that you can be holding tether for moments like this. And I have a teaser to that in my library section called 10 bags or 20 bags or whatever it's called in the library in the description section. You can go check it out, kind of show you techniques on how to do that. So crypto crackheads and cryptillions, let's turn it up to ×2 speed. So let's get Timified and red dildos up your bungholified. Let's do it. Okay. Is this the beginning of the bear market? I want to make a video on situations for and against it, and then mix in my personal opinions, but price doesn't care about my damn opinions. It doesn't matter. My opinions honestly don't matter. Only objectivity, you know, can truly help you out. Objectivity of multiple scenarios that are possible, if not probable, and making guesses on what's more probable or not. So that's what I want to do here. So so what we have going for a bear market here, and there are a lot of cases that, you know, that are supporting. So I'll do the bad news first. Here we go. So this cross has called bear markets perfectly. I made a video on it right before it crossed saying, oh shit, it's going to cross. That has a 100% hit rate in Bitcoin to call the bear market. 100. However, to comfort myself, and perhaps I should have been comforting myself, perhaps I should have told myself it's 100% hit rate, period. However, I saw that in Ethereum and other big coins, it did during a bull market, particularly when the asset went sideways for a while. So it went on a screamer, went sideways for a while. You did have a cross, then price marched on up. So that happened on Litecoin too. So I thought, well, Bitcoin last bull run, you know, recently hasn't gone on a screamer and gone, it's actually never gone on a screamer and gone sideways. It's either done a steady and up like 2017, or in 2013, straight up blow off, 70% correction, straight up blow off, all within one season. It's actually never done this. So I was thinking, well, price history has never done this. So if Bitcoin price is doing more like Ethereum and Litecoin back around May to October 2017, and they marched on forward, so should Bitcoin. Yeah, so it is true. Bitcoin has never gone on a screamer, a super aggressive run, and then moved sideways for a long time. It has never done that, ever once, okay? Which is partly why during when we're in this toppy area, I was the only weirdo YouTuber talking about, I think a dip's going to happen. Now, I did not expect it to be this, so I'm not saying I called 30K. I think the lowest number I said was 37 to 39. I was really targeting 39.5. But I said this is by far the nastiest bearish divergence that Bitcoin has ever had, by far. It's never printed that much divergence ever, and it's even worse looking on the daily. So I just knew, like, there is going to be a flush, right? And I made a Twitter post on it, but like literally maybe 15 minutes before that one $5,000 or $8,000 drop within 1 hour. But I thought that was it. You know, you got to get down and get up. I thought that was it. A quick flush in and out, and then you can march on forward or keep marching sideways. So It crossed. It has a 100% hit rate. It is totally possible. I was simply buying hopium by comparing it to other coins who did have an extremely similar posturing. Perhaps that wasn't the right thing to look at. It is possible because it does have a 100% hit rate for Bitcoin, but not for Litecoin, not for Ethereum, and a lot of other assets, actually. So I don't know. Was that hopium or was that a good justifiable reason? And you know, which one? All right. So that's the first one. Second is simply looking at the weekly 21. Let's put on the 10 EMA too. And for new viewers, if you want to set up your charts well and help yourself enter safely, library video, watch it after this, 2x speed. I show you how to set up your charts. Like mine and to add other things, right? So anyway, anytime Bitcoin has not reacted nicely off the weekly 21 in a bull market, that means bear market has begun. And I think the hit rate is 100%. Okay, so let's go back. Remember, there's good news too. I personally don't think this is the beginning of the bear market. I personally think, so just to let you know, kind of a spoiler at the end, I think because Bitcoin's never moved this way, it will do things within a bull market that continues that it has never done. Okay, however, I'm going to give you the reasons why. I mean, it's definitely a top 3 probable that we are seeing the beginning of a bear market. In whatever form that may take. So maybe it is different this time, but in the opposite way that people were thinking, which is what I kept trying to say. Institutions won't make the bear market go longer. And so I'm on video saying it. It'll make the bear run come sooner. Or it won't make the bull run go longer. It'll make the bull run end sooner, right? Anyway, but I never thought this soon. So here we go. So look, the reaction off the 21 during all last bull run, good reaction. And honestly, it never stayed below it. Good reaction. Let's go back to the previous bull run. And if you want to see a lot of Bitcoin price history, go to Bitcoin versus the dollar on Bitstamp. I think of all charts, it has the most price history. I think that, or there might be one like clandestine one or something I don't know about. But anyway, look, literally every time. Good rate. So the 21 is the yellow line. So when it didn't get a good reaction off of it and it got stuck below the 10, what happened? Price tanked. However, in this case, after it did get stuck below the 10 and price tanked, what happened? Screamed up and went on a nasty, nasty, nasty run. So is it possible that we are literally just seeing a version of this, but more rounded? And we just saw this and we're getting ready to fly? It is possible. Because this wasn't a bull market. This was still mid-bull market. This is bull market. People thought it ended. Okay? But anyway, so the one time it didn't react nicely off the 21 and the 10, it got stuck between it, it crashed. But we've already seen that crash, so I guess that's not supporting the theory. I guess that's technically not supporting the theory that Bitcoin is entering a bear market. But anyway, so you can see here, when Bitcoin did not react nicely to the 21, as in go up, then it went down for a long period of time. I mean, that's over 100 days right there. 120 days. But Bitcoin was a very young asset, and market cap of, I don't know, like 150 million or something like that. Maybe even less. I can't remember. But so, yeah, Bitcoin rarely, there's only been one instance that Bitcoin in a bull market to like a hopium support that did not react well off the 21, that it wasn't a bear market. This is the only exception to that rule. So at least the rule has an exception, right? It has one exception. But other than that, the probabilities are highly in the favor of this is a beginning of a bear market. Like in this one parameter, it's highly probable if you only use this as your base litmus test parameter that the bear market has begun. Okay. All right. Percentage drops. If you're in a crypto space, you know that these drops were between like 33 and 39.5%. So they're just round low 30s to 40. Okay. All of these. This one was 73 though. or maybe higher, actually more. I don't think it's fair to like hit that exact top. Let's do like from the middle of it, because hardly any, like, there weren't many orders of people having bought this. Like, this wick could have been like one person from there, or a couple, or maybe 100 or something. It wasn't a lot of people. So, you know, it's technically like a 75% correction, but let's say the mid 60s. So when altcoins get too hot too fast, you know, I keep saying 40 to 60% is what things do, right? So anyway, give me a second here. Oh, percentage drops. So this percentage drop is also another exception to the rule. So I guess the only bull run we have for this, actually no, we have two bear markets. All right, here we go. So whenever you had nasty percentage drops within one move, right, of well over 50% or 50% plus, I think that was the beginning of the bear market, with only one exception. So this is over 50% drop, bear market. And again, Bitcoin has long cycles. So over 50% drop in one move. So move being defined as, you know, this is one move, that is one move, that's one move. Okay, kind of like up and down movement. Okay, so in this move, it went down 69%. Didn't react nicely off the 21 either. Here, we already know these. These were around, you know, high mid 30s to 40. So the only times with only one, so I guess it's a 2-to-1 ratio. Twice it was a bear market, once it wasn't. So you want some hopium? Well, this will even up the score. It'll be 2 for 2. It'll make it 2 for 2. All right. And what else do we got? I think those are the major things that I wanted to cover. To add to the second one I did about the 21, the reaction to it, oftentimes it's also the reaction off the 10, but it just kind of fell through it. So, but usually, like in the last bull run, it got trapped below the 10 and then dropped. And that was, but it didn't even, it just fell right through. It fell through the floor, right? Like immediately the pace accelerated. So those are your cases for a bear market. I bet there are more, but that's what I am coming up with on the fly here. Cases that this is that this is not a bear market. All right. Well, first off, hopium of this of 2013 repeating. It's there. It was real. It could happen again. That's the first thing. So what I want to do, though, besides just pointing out it happened, it'll happen, you know, that's not TA, you know, obviously. But the reason, or not reason, I wouldn't say reason, the nature or the posturing of it that happened before this mid-bull run crash was it got too hot too fast. 2017 did not get too hot too fast. Therefore, all of its corrections were moderate. It stair-stepped beautifully, kind of like VeChain before it crashed, obviously even harder than Bitcoin. VeChain just crashed hard. But anyway, it was a healthy stair-step. Did not get too hot too fast. So now, what did Bitcoin do this time? Got too hot too fast. So the posturing is very similar to what 2013 was. And 2013 was the year that this flash crash was mid-bull run. Posturing being almost identical. And it's kind of interesting that throughout this time, when I was doing TA on the way up here and up here, I kept saying, this is so similar to 2013. So even, you know, the feel of it from a charting standpoint, I wasn't in Bitcoin in 2013, but the feel from it has just felt so 2013 from a charting perspective. So the hopium here is that this is just more like 2013. So stop looking at 2017. It's not a good comparison. So if you can justify that, then all right. 1 for 1. There's only one data point of getting too hot too fast in a bull run. There you go. Next is the distance from the weekly 200 EMA. It does not indicate a top at all. So typically when you top, or I guess there was no 200 EMA last back here, right? You can't really do it from there, but it was not about 900% above the weekly 200 EMA from here to there. The moment it peaked, 900%. All right, here. There's about 40% of that. Only 350% above the 200 week EMA. So this supports the idea that this was not a top. Rather, it is a correction. Because I guarantee you, if you could like kind of draw this out and guess where this would have been, I think it would have been pretty far away. Like even I bet it was like 1,000 something. Yeah, 1,400%. 900%. So if you like, you know, take a fraction of it, maybe guess like 700% above. Oh, but yeah, but you know, take it out to December. If the 200 EMA goes like this, right there, do about 700% up. Put you at 200 grand. Is that a common guess for Bitcoin topping out? Yeah. Lines pretty well with the percentage getting slightly smaller each bull run distance from the 200 EMA. So this says, and Willy Woo, who he does on-chain, off-chain analytics type of stuff, kind of like the economist of crypto and Bitcoin. He likes to judge how hot a market is by its distance from a percentage distance, or just the distance, I guess, from its weekly 200 EMA. So this is not toppy, according to history and just normal tops within Bitcoin or crypto price. It's not toppy. Period. So if it's not toppy, with like some of these examples, that means all fingers are pointing towards 2013. All right. So what else do we have? So if we go to the origin lines, from a structural standpoint, it's only halfway up. It only got to halfway up its chart. So from a structure standpoint, it doesn't even make sense that this is the top. Not even close. Where did Bitcoin's 2013, flash crash during the bull run go to? Just above the orange line. It actually touched the next one up, but most of the price action was just above the orange line. Where did it happen this time? At the orange line. So the more similarities to that you can make, the stronger the case is that this is more like 2013. Flash crash, mid-bull market. So a lot of things are pointing towards the idea that it might be more probable that it's doing this. Distance from the 200 EMA. Structure in the origin line chart. Too hot, too fast, pretty normal dip within crypto for getting too hot, too fast. It was all like 2013. So it's just so many stars are lining towards this is 2013. So how do we know as we approach here? Are there more examples? Yeah, but I'm good there. So actually, I don't know if I want to do that. I have another clean chart. All right. So how are you going to know as, things rebound or not? How do you tighten the gear on your probabilities, right? So right now we're thinking, it's both are very likely. Is one greater than 50% chance? No. Hell, there's a solid chance, maybe 10% chance it goes sideways for 2 years. That might be like a 10% chance, seriously. Do I think it's the top probable top 3 probability choice? No. However, if it did go sideways for a year, it would go a lot. It would probably hit $1 million. That would be a lot of consolidation around there. That would actually be pretty cool. It'd be less glorious, obviously, for a year, but it would be pretty neat. But anyway, so let's do this. So how are we gonna know? How are we gonna tighten the gears as things go along to get more statistical significance to our probabilities here? There's an easy answer. It's reaction off of the 10 EMA. If it can consolidate just under it or just over it, that's good. If it screams past it and looks weak, screams down, and it starts screaming down about here, you're going to know, shit, this is not going to be quite like 2013. Actually, let me double check that. I don't know what 2013 did in this regard. I would assume it reacted really nicely off of that and or consolidated around it, but I need to double check. Yeah, there you go, perfect. So you need to look for, yeah, exactly, yes, good. I didn't know if I was just talking out of my ass there or not, but just that's how charts work, though. So that's kind of why I knew that it's just how things happen. And if you want to know why it just happens that way, it's because after a huge scare, price has to do something to give confidence to the different groups of people who are looking at, trading or the price of anything, buying anything. The three groups of people are buyers, sellers, so sellers, buyers, and sideliners. Sideliners mean you're not buying or selling. Maybe you're holding, but maybe you're not. It's just you're not trading. You're not hitting buy or sell. So in order to convert sellers into either sideliners and or buyers, in addition to converting sideliners to buyers, what price has to do on a weekly scale related to its 10, and the reason why this happens is this. What I'm saying is this needs to happen for these processes to happen, for groups of people to change the group they're in to a more positive group. So sellers becoming sideliners, so they stop selling, and or sellers instantly become buyers. Both of those are positive. Like they reduce the vector of force of sell pressure, right? Sell pressure reduces in that case. And that doesn't happen unless something like this happens around the 10. Why is it the 10? I'm not actually for sure, but it's just how it works. And then this also has to happen to turn sideliners who got scared here, like, I'm not getting back in. I'm not getting, ooh, actually, you know what? I'm getting back in. Becomes buyers. So if a situation around the Bitcoin weekly 10 does not happen, that will convert sellers into one of the other two groups, you're going to know this is bear market stuff. And one of those situations would be more of a fake out. It might not be this obvious. It might not just get rejected. Bitcoin might freaking fly past and go smack. I would prefer to see it like consolidate there and not pass it, or pass it and like land on it and ride for like a month, like 3 candle closings or 4. I would love to see that instead of something, oh, this is awesome. Like that would concern me. That would feel like a trap to me. If Bitcoin really flies past this, I would safely assume that's a trap. I would probably tether the hell up, or stablecoin the hell up, whatever stablecoins you like. DAI is also a good choice. Whatever all the USDCs or all that. But this actually would concern me. And what also would concern me if Bitcoin comes up to its 10, the red line, and gets flat rejected and it starts accelerating down. That would be bad too. But I kind of doubt that would. I kind of doubt that would happen. Screaming past is probably how it would go, or it could go like this, get up and just couldn't hold it, and then you could see it started to accelerate down. I guess that could happen, but I think that's the least likely. It'll either scream up, come down, or get flat out rejected without much consolidation and head down. Maybe 1 or 2 candle closings below the 10. That could happen. So this is how we're going to know and better define or better apply probabilities to know what to do with their money. That's what I personally in our community is going to be looking for, is how it reacts to the weekly 10. And those are the situations that we're specifically looking for. But what if it never hits the weekly? Yes, it's going to go back to the weekly 10. But why? Because it does. When you drop an egg, why does it break? Because it freaking just does. Right? You can calculate gravity. You can predict gravity perfectly, how it affects light and, other forms of matter. But you don't know what the hell is actually why it's happening. No one does. No one does. So, I don't know if anybody can explain why necessarily. It just freaking does. It's going to go back to the weekly 10. Will it do it next week? I don't know. But it will. Could it travel down pretty far first, down to 42K before Bitcoin finally does it? Yeah, that's actually, that actually might be that's actually a reasonable scenario. Yeah, it might take 3 weeks, and therefore it will be around 46K or, somewhere between 48 and 42K is where I think this will start happening, with Bitcoin price coming up and getting there. Yeah, it could be a little lower too, like this. Something like, Bitcoin coming up to it in freaking July. So if it takes till July to get to it, that'll be as low as 45K. If it does it in the middle of June, it would be, around 46.5. So really, where it meets up with the 10 in terms of price level, it just depends. It depends on when it gets there, but it will get there. So you will be able, to in most of your positions, have them go up from here, right? Perhaps get back into profit, or most likely, actually, I would say, better than break even, unless you're buying tops, listening to YouTubers. Then you're not going to get back. Buying Doge at 70 cents. Oh my gosh, poor folks. Buying Harmony One at the top, buying Pirate Chain at the top, buying. I feel sorry for people who thought things were going to go up forever, but this channel, I tried to warn you of that. And I was the only crypto YouTuber stressing hold Tether within 7 days of this dip. Or perhaps even the whole freaking month of May. I bet you he might not be able to find one in the whole month. But I know some YouTubers do talk about it quite often, and a lot of crypto YouTubers they do have your best interest in mind. They're not trying to screw you. So that's not what I'm alluding to here. But in terms of the approaches I take to try to keep folks safe within crypto, it seems my methods are pretty solid in terms of profitability over time. So that is what we're looking at. Any questions? Jose? Yes. The answer is yes. Natalie, 42. All right, so don't freak out. Even if it is a bear market, don't freak out. Bitcoin will go back to the weekly 10, and alts will charge up. You'll be good. Even if it is a bear market, it will come back up. It'll rebound pretty aggressively. You want to see? All right, let's do it. Let's do it. All right. So look, aggressive. Came right back up. And it took 1, 2, 3 weeks. Actually, it only took 2 weeks. The second week even wicked above. There you go. 2 weeks. Even in the mini dip, what did it do? It only took the next week. Got right back above the 10. The next week. So shit, this might happen a little sooner than I'm thinking. So that actually doesn't count. It's this one. It was the next week. So yeah, honestly, the numbers are saying Bitcoin will be back up there next week. Or the week after. I think it's like an 80% chance it'll be back there next week or the week after, given the previous numbers during, bull runs. And is there much data? Are there many data points there? No. But I think it's a good chance it'll be back up there within a week or two. So yeah, so you're okay. Even if this is a bear market, you're going to be fine. You're going to be fine. You'll be back in a profit for and it'll hang around there for a while. You'll be fine. Unless you bought tops, listening to YouTubers, okay, who don't know much about price. Other than that, everybody else is going to be fine. Folks who held Tether, took my word for it about holding Tether, you're doing awesome. You're getting steals. And even if it is a bear market, you're going to be able to sell way higher. Dead cat bounces get hot. People get a lot of hope and start buying a lot of stuff. And alts scream pretty hard too when those happen. At least the first one, especially the first one, gets pretty hot. A lot of price action upward, a lot of aggressive buying. Because everybody thinks they're getting a deal before it keeps marching up, right? So there's a lot of aggressive buying. So even in worst case, this is a bull market, you're still going to be freaking fine. I just showed you. It's okay. What can you take from this? When you take profits, maybe hold some tether, especially when there's bearish divergence on Bitcoin on the weekly. Or when you feel the market's been out for too long, trust your gut. And whenever you're taking profits, maybe keep 50% of it in tether and deploy the other 50% in coins that might break out soon or something. You can get a feel for how hot a market is. It's when all the noobs think everything's going up forever, like Pirate Chain going on a $5,000 run and people saying it's going to keep going. That is toppy stuff. When large groups of people are doing that, that is maybe not toppy like end of the market stuff, but also that means the market's too hot. Too many people thinking it's all up forever. Okay, in my gut, I need to start tethering up or whatever stable coin up that you got. So next time, be more prepared, and that's how you can learn from this, okay? And be looking at weekly candles. Start on the weekly. Okay, unless you're buying a swap coin and you're gambling with no price history, then you can't do it, which is why it's gambling, because you have nothing to base your decision on. You don't know if you're the house. So therefore, if you don't know you're the house, that by definition, you are the gambler. All right, you just got Timified new viewers. If you like what you saw and you subscribe, let me know if you want to be a cryptillion or a crypto crackhead. You need to let me know your crypto pronoun. See you later.